Hi, this is Devins Financial Weekly Stock Analysis Newsletter. Today is May 11th, 2014. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. Your stock market remains in a correction. Some leading stocks broke out, but some failed the base. So we have a market that most of the stock are not doing well, but still there's some a few stocks are still doing pretty good. What to do in this market? I'm keeping a watch list of stocks that break out, or some the watch list of stock that are still building a base. Let's take a look at the major indices and their charts. German DAX index is consolidating in this area. Shanghai Stock Exchange Index is in a downtrend. Nasdaq is pulling back to 200-day moving average. Nasdaq, you see on the down days, the volume is pretty high. On the up days, the volume is very low. That indicates institutions are still selling. The risk sectors, the growth stocks are being sold, and there's not enough buyers. Mid cap below 50-day moving average. Small cap broke 200-day moving average, and that's very bad. SP 500 large cap is above 50-day moving average. SP 500 has a lot of energy stocks, utility, energy, oil. Those are the sectors that are doing well. Gold index still consolidating. Silver consolidating at a low level. Gold mining index ETF consolidating at a low level. US dollar rebounded a little bit. Crude oil came down. Real estate ETF is going up. This is a very strong uptrend for real estate ETF. Real estate fund, bond fund is going up. That means real estate mortgage rate is coming down. Semiconductor index come down below 50-day moving average. Social media index ETF this is a very deep slope of going down. So this sector is not doing very well. Stocks like LinkedIn, Facebook, and they're struggling. And their other stock is even doing worse than them. TAN is a solar ETF, solar sector ETF going down. XLE, energy selector stock ETF going up. Financial ETF is consolidating. Those are the indices. Let's take a look at some of the watch list. I'd like to share with you of 3 stock watch list. First watch list is the stocks that are building a base. Second, the stocks that have broken out. The third list are the stocks that failed the base, so they broke down instead. So let's take a look. Base building stock. Anika Therapeutics and building a flat base, and the buy point is 52.59. So this is pretty, or if you take the closing price of this day, then it's already broken out from the flat base. However, the strictly speaking, is a high of that base. Matrix service, this one reversed from the downtrend and going up, and on the up days volume is extremely high. That's indicating the institution is accumulating this stock. So now it's above 50-day moving average. Skywalks solution, this is very beautiful flat base consolidating at this very tight range. After it gave up, it consolidated in a tight range. If it can break out above 42.38, that would be a breakout buy point. That's worth of watching. Take a look at the stock already breaking out. AFSI, Amtrust Financial Service. This is broke out. broke out from this base, and it's making another tight range. Airless broke out from flat base on Friday, and volume is good. Aligned tech systems broke out here previously. It's still valid. The breakout is still valid. Canadian Pacific Railway broke out here. Iconics brand group previously broke out here. TRN Trinity Industry broke out here. A third list of the stocks that failed from the base building. Drillquip. This stock was building a cup with a handle base, but look what happened on Friday. It fell the base. It gapped down instead with a high volume. That tells us how important it is to wait for the breakout before buying the stock, because it may not break out. It may just fail. So if the stock failed the base building, and there's no reason to buy them. And by patiently waiting for the breakout before you buy, you avoid stock like this. Trimble Navigation also broke down. It was building a flat base, but it gapped down on earning, and this is bad. There's a high volume gap down, so you can just, I'm gonna just take it out of my watch list until it does something else, like going up again. So there's really no reason to buy a stock if it's being sold heavily by institution. What to do in the current market? Still, cash is the king, and keep a list of strong stocks, especially the ones that are building the base or are breaking out. If you decided to buy breaking out and stocks, keep the position small. It doesn't mean you have to. When the general market is in a correction, it's better not to buy stocks. But if you really know a good stock and they're breaking out, you really want to buy, just keep in mind, in a downtrend or correction phase, the breakout tend to fail a lot. So you have to keep the position small in case it fails. You can just get out and without losing a lot of money. That's all for this week. See you next week.